Investment advisory services offered through Alpha Capital Management, LLC, a SEC-registered investment advisor. Alpha Capital Management, LLC, and SWAN-Capital are independent entities.
What your money would say. Andrew McNair. Money Talks. Are you listening? Money Talks. Are you listening? Money Talks. Are you listening? What your money would say with Andrew McNair.
We're live here on What Your Money Would Say. I'm your host, Andrew McNair, and for the next 30 minutes every Saturday from 12:30 to 1 o'clock here on WCOA 1370, I will be your retirement resource. Now, on What Your Money Would Say and SWAN-Capital, our goal and our passion is to help you take a financial chicken and make you a financial swan. Because we believe, as a financial swan, we believe you should sleep well at night as a retiree. You know, you've worked your entire life. You've put money in your company 401k plan. You've saved to your local charity. You've gave and tithed to your local church, and even put 3 kids through college. But it comes to a point where you've worked your entire life where you deserve to sleep well at night. And I always joke with my clients, you know, it's my responsibilities to take care of the job and the responsibilities of your retirement plan, but it's your job to enjoy the pleasures of retirement. So we want to make sure that we deal with some of those responsibilities. So I'm going to kind of pull back the curtain on where I see a lot of chinks in the armors of financial plans, and that is auto insurance and homeowner insurance, which over 190 million people are driving right now that may or may not be uninsured, which can affect your financial plan. So we want to make sure that you're protected as the best that you can be. And before we do that, I want to share with you some upcoming events we have here at the SWAN-Capital community. And that is our Social Securities Class 101. Now, this class is going to help answer some very important questions. And one of those questions are, when should you take Social Security? You know, you're approaching retirement. Do you take it at 62? Do you take it at 66? Or do you take it at 70? Well, that's what we're going to dive really deep into in that class. And it's going to be at UWF. The tuition's about $35, and it's coming up in October. So you want to reserve your seat as soon as you can. If you're ready to RSVP, go on to swan-capital.com. That's swan-capital.com. Or you can call our office at 850-380-9558. That's 380-9558. And we're also going to answer some important questions like, is Social Security even going to be there for me when I get to retirement? Or how do you maximize your Social Security benefits? Because let's face it, most retirees, when they get to retirement, that's one of the few retirement incomes they have. So if that is you that I'm describing, you want to make sure that we squeeze out every dollar that you're entitled to from the Social Security Administration for you and your spouse. So don't miss that class coming up in October. Now, the topic I want to talk about is your auto insurance and your homeowner's insurance. And I'll, spout this disclosure off multiple times, is that I'm not an auto insurance or a homeowner's insurance person. I don't work for State Farm, Allstate. That's not my expertise. I don't have a dog in the fight on trying to sell you more insurance. My job as an owner of a wealth management firm is to help all my clients make sure that they're protected, that they make sure that their investments are protected from catastrophic events like a car accident or a hurricane or any damage to their home. So this is a culture that we have to be prepared for. As you know, we live in a sue-happy culture. We live where a neighbor thinks that they are entitled to your dollars if they slip and fall on your concrete while their kids are playing at your swimming pool. That's the culture we live in. You know, we can't change that. But what we can change is how we approach it and make sure that our retirement plan is protected from incidents like that. So to protect yourself from that Robin Hood mentality out there, we need to look at some of your auto insurance and homeowners insurance. And how we do that is making sure that you're educated on what all the terms mean. And we're going to dive very deep into that in this week's radio show. I'll tell you from a confession from a financial advisor. I have tons of clients that come into my office and they lay out what I call the junk drawer. You know, they may have an investment plan. They have their auto insurance, their homeowner's insurance, bought from different people, from different professionals. and then they, put it all in front of me. And as a head coach of their finances, I got to make sure that the defensive coordinator is doing their job. And if you're watching that Florida and Miami game, it looks like Miami's giving them a tough run. But we need to make sure that that defensive coordinator is, which I'm talking about your auto insurance and homeowners insurance, is giving you the proper coverage that you need to protect your family. And here's the problem, and it's just the system. An auto insurance or a homeowner's insurance expert can't get you the right amount of coverage, because if they come across saying you need to increase your coverages, it seems like they're trying to sell you something. See, when I look at it from a third party, I can say, hey, you need to check out this area because this could, cause a huge problem in a real accident. So that's the peace of mind that a financial advisor that's looking at the whole plan can offer you. Now, as we're going through your auto insurance and homeowners insurance, when we're going through these terms, if you have any questions during the show, please give us a call at 478-3116. That's 478-3116, and we'll be happy to answer your question live on the air. And why this show is so important is because many Americans are what I say is driving a ticking time bomb. When it comes to accidents and the statistics, it's not a matter of if, it's a matter of when and to what severity. So we have to be protected from the the fender bender to the catastrophic accidents. And you might say, well, Andrew, I got my insurance, I got that check in the box. Well, let me explain to you how important this is. Many families don't understand that not all of your assets are protected from lawsuits and creditors. In Pensacola, we are in a more senior aging demographic. So there's many families that are driving in their 70s, their 80s, and even their 90s, and they're driving sometimes even unprotected. They have, the tag insurance, the $10,000 per person and the $20,000 per accident, but they may have $200,000 sitting in money markets, checking accounts, and CDs. And this may be your parent I'm talking about. And they're driving around, and if they get in a car accident, they could have a perfect record. They could have never had a car accident their entire life. But if you get in a court, and then let's say we're dealing with a 70-year-old versus a 32-year-old, and it's the 32-year-old's fault, even if it is, the judge is going to say, well, Mr. or Mrs. Older gentleman, did you pull out? And he's going to say, huh? I didn't hear you. You know who's going to be guilty in that situation. And that's the sad reality, and that's the way it is. But those assets, the CDs, the checking accounts, the money markets, are not protected from lawsuits and creditors, which means that, you have a personal injury attorney that can go after those assets. And you don't want that to happen to you or your spouse. So you want to make sure that you're protected. And at SWAN-Capital, we go through a liability identification checklist where we go through every part of your protection components and make sure that it protects your situation. So you want to make sure that you are protected and you're working with someone that's being that head coach, that's talking to the defensive coordinators, and making sure that your financial plan is going forward but won't get snagged while you approach the retirement red zone. Now, we do have a question. We have a Janet on the line. Welcome to What Your Money Would Say, Janet.
Hi, how are you doing, Andrew?
Outstanding, but I'm improving. How can I help?
You mentioned CDs and other things that were not protected from lawsuits and creditors, and I'm very concerned about that. What should I do if I have some CDs? What do I do with them?
Well, that's a fantastic question because a lot of families are in the same boat. They have these CDs, especially in this low interest rate environment. They're yielding 1%, but it's scared to go into the market, especially with the Syrian war out there. If you go into the market or you're looking at bonds, you could really lose money there. So a lot of families are in CDs where it's FDIC insured, which gives them sometimes a false sense of security because they think it's protected from default risk. It's what we call a safe investment. But if you're driving, you could get in an auto accident where they start to look at those assets and say, hey, you need to help pay for that person's accident. So, Janet, there's two things I want to share with you. The first one is making sure that your auto insurance is in line with your asset situation. And we're going to talk about that in detail, so stay tuned for the next 15 to 30 minutes. And the second is you want to look at some of the protected assets here in Florida. And I'll list those off for you so that you can investigate them and see if it's a good fit for you. The first one is IRAs and Roth IRAs. Those are what we call retirement accounts. So they're typically protected in the state of Florida from any lawsuits and creditors. The next is annuities. Annuities may be a good fit or may not, but they do offer a protection component that other investments don't. Also, life insurance cash values, Janet, are protected. And then your homestead's always protected, which is nice because you never need to worry about losing your home. So thanks for the question, Janet.
Thank you, Andrew.
All righty. Janet had a fantastic question. If you're just tuning in to What Your Money Would Say, I'm your host, Andrew McNair, and we're talking about a chink in many financial planners, plans armors, which is auto insurance and homeowners insurance. And I talked about how that many families kind of compartmentalize these decisions. They say, I have my auto insurance checked. I have my life insurance checked. I have my homeowners insurance checked. But, you got to think about it as a strategic plan and pull them all together. So to do that, to make sure that you're properly protected, to make sure, like I told Janet, that your auto insurance is in line with your assets, the key is education. And what I want to do is go over some very important terms that you need to understand that is typically found on your auto declaration page. That's the page that they send you when you renew your auto insurance that you want to have handy. If you're driving, don't try to find it. Just write some of these notes down, and then when you get home, look at them. And again, if you have any questions while we're going through these terms, give us a call at 478-3116. That's 478-3116. The first thing I want you to look at is your liability. That's your bodily injury, and that's per person and per accident, and it's broken up to two. See, many families I run into have what we call tag insurance. They have 10 and 20, which means that, I won't name any big box insurers, but let's say that you get in a car accident. Well, the insurance company is only on the hook for that $10,000 or $20,000. Then their hands are up. They say it's up to the client, their customer, to take care of whatever's left. So let's play out a real life example. Let's say you get in a car accident, maybe it's a 3-car pileup, and as you know, with the new cars today, it could easily be $50,000 to $100,000 in damage, especially with medical expenses and loss of wages. It can rack up pretty fast. Remember, sue happy culture. They were entitled to those losses of wages, so they're going to come for that money. So the company, pays out the $10,000 to $20,000, and then they come say, well, we need another $30,000. Well, then we get into trouble. See, then they're going to start asking, well, I think I'm going to have call my attorney so he can look in to see if your asset situation, if you can pay for some of those expenses. Well, that's why you need to make sure that your bodily injury at least gets close to your asset limit, if not over top. So if you have maybe $300,000 of assets, you want to have at least $250,000, $500,000 in bodily injury. Now, you may say, well, Andrew, gosh, you stop right there. That's going to cost me a lot of money when it comes to increasing my coverage. Well, stay tuned because we're going to talk about ways to offset some of those expenses. The next thing I want to talk about is property damages. This covers the property damage of your vehicle. And so if you're driving, maybe a $35,000 car, but you have $25,000 of property damage, well, there's a disconnect there. So you want to make sure that it's in line with what you own. The next one, this is very important, is the uninsured motorist. And I'll tell you why this is important. I'll give you a personal story, and that is, it hits home because it was me. I was with a girlfriend. We were going from the Naval Aviation. We were at the museum. We saw the air show, having a beautiful day. It was bright. There was no rain. We were just driving through. And at the Pine Forest and Wild Lake intersection, I went through the green line, and someone decided to go to the interstate and go on the on-ramp. And I hit them going 45 miles per hour. See, I always thought, I was under the impression that, I'm a pretty good driver. I can avoid that accident. There was no way for me to avoid it. I was just going through an intersection, and they pulled out in front of me. So how do you make sure that you're protected in that situation for when life happens? Well, luckily, I followed some of my advice at this time. And so I luckily had 250, 500,000 uninsured motorists. The person I hit did have tag insurance. That's all they had. So Allstate, who was the carrier, paid out the $10,000 like they were obligated to do, and then they were off the hook. Then luckily, my uninsured motorist is going to pick up the rest of the tab. Because if I didn't have uninsured motorists, I'd have had to sue them. My attorney would have had to sue them for damages for my health care. And you don't want to go through that legal battle if you don't have to. So that's exactly what uninsured motorist does. It's a pool of money for you, the person that owns the policy. So if you get in a car accident, you can pull from that amount to pay for your loss of wages. How about just your medical bills that are going to rack up over that time? So you want to make sure that you have adequate enough uninsured motorists on your auto insurance. The next thing I want to talk about is deductibles, which is broken up typically in collision and comprehensive. Now, collision is the coverage that pays the damages to your vehicle caused by collision with another vehicle or an object. And so basically, if you were playing fender bender in high school, you know exactly what I'm talking about. You need low collision deductibles because you're going to be bouncing around every object and you need to fix your car. Now, if you haven't had an accident in 3 or maybe 6 years, it may be a time to start raising that collision deductible and start offsetting some of this increased coverage that we're talking about and that I'm encouraging you to look into. The next one is comprehensive. This coverage pays for the loss of or damages to the insured's vehicle that doesn't occur in an auto accident. So this would be like damages caused by fire, wind, hail. Luckily, we don't have to deal with that too often here in Florida, or flood. Now, that could happen here, or vandalism or theft. So if you think you're in a rough part of the neighborhood, or you think you're pretty close to the ocean, you might want to keep that comprehensive deductible low. But again, this is why auto insurance, homeowners insurance should not think compartmentalized. Because let's say you have the 3 to 6 months of liquid cash that I encourage you to have, you can afford to have a higher deductible because you have the money sitting in the bank to pay for an accident like that. Now, again, this is why it takes a head coach to look at every part of your financial situation. And we're going to take a quick break, and then we're going to talk about, again, recouping the cost. How do you increase coverage and recoup the cost? And then we're also going to talk about some homeowners insurance coverage and make sure that you're protected for that. You're listening to What Your Money Would Say.
What your money would say. Today's financial landscape can be rough. One of the most important aspects of planning is choosing the right guide to help you navigate the road to retirement. Andrew McNair and the team at SWAN-Capital is dedicated to providing the very best service in the retirement planning industry today. SWAN-Capital is a full-service independent wealth management firm dedicated to providing guaranteed custom income plans that you cannot outlive. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. The difference between SWAN-Capital and you retire once. We help people retire every day. You should be enjoying your retirement years, not letting worry keep you up at night. SWAN-Capital. Sleep well at night. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. Again, that's 850-380-9558.
The Veteran Benefit Project, founded by Andrew McNair, president of SWAN-Capital, is a nonprofit organization dedicated to helping veterans and widows of veterans with long-term care expenses by qualifying for the VA's Aid and Attendance Benefit. Learn how to receive over $24,000 per year from the VA towards long-term health care. There is absolutely no fee associated with our assistance to the veteran, the widow of a veteran, their families, or any retirement community. Our goal is to preserve the dignity of the veteran and to reduce the dependency on the Medicaid system. Again, learn how to receive over $24,000 per year from the VA. Contact the Veteran Benefit Project 850-380-5137. That's 850-380-5137. 850-380-5137. Look us up on the web, veteranbenefitproject.com. At the Veteran Benefit Project, we are committed to helping you secure the benefits you deserve.
Retirement expert Andrew McNair. Changing the retirement paradigm. Now back to What Your Money Would Say. Brought to you by SWAN-Capital.
Welcome back to What Your Money Would Say.
I'm your host, Andrew McNair. Remember, this show is live, so if you have any questions about your auto insurance and homeowners insurance, which we're talking about today, talking about that aspects in your financial plan. If you have any questions, give us a call on air at 478-3116. That's 478-3116. All right. Now back to some of the terms we were talking about. When it comes to your auto insurance, you need to understand some of this, which is PIP. Now, this is personal injury protection. This is required in some states. It's required in Florida. And this coverage pays medical expenses for the insured driver, regardless of fault, for treatment due to an auto accident. Now, because of the flood of people taking in PIP, they've actually started to make some changes to this. So you probably noticed some of the changes at your chiropractor. So they're starting to cut back on some of these benefits. The last one I want to talk about is the rental reimbursement. This is basically where you're paying for the when that accident happens. For when you need a rental car, they'll give that to you and provide that to you. If you live in a large family that has bunches of cars, you might not need that. But if you're living by yourself in your own in a different town away from your family, I think you need the rental reimbursement part of your policy. Now, the next thing I'm going to change kind of focus, which is homeowners insurance. And this is a very big piece of your financial plan because one of the largest assets owned is your home. So you want to make sure that it's protected. And there's a few things I want to highlight on your statement. And to look at your coverage, you need to pull up your homeowner's declaration page. And it has some of these important things that you need to look at. And one of those is your dwelling. This is how much it would be to rebuild the house. So if you have dwelling of $150,000, yet your home, because you've made improvements to it, costs $200,000 to rebuild, well, there's a mismatch. And if a catastrophic event happened and it got wiped out, which happened for a lot of people, and Hurricane Ivan, you could be stuck paying the difference. So you don't want to be one of those sad stories I hear all the time where they got wiped out by either Katrina or Ivan. You want to make sure that your dwelling is how much it would be to rebuild your home. The next one is personal liability. Now, this typically ranges from $100,000 to $300,000. And if you constantly have different parties at your house, your kids come over, you have a pool, it may have a $300,000 liability because this will protect for bodily injuries, for someone at your house if they slip, fall, loss of wages, medical payments. That's what it's there for. The next one is other structures. Now, this would be if you have a really nice shed and you only have $3,000, but you have a really nice structure on your property. It might not be enough. So you want to make sure there's no mismatch there. The next one is deductibles. You want to make sure those are in line. It's typically maybe $2,000, $2,500, and 2% per hurricane. So again, you want to make sure that your deductibles are where they are. And you want to make sure that you have the 6 months to a year of liquid cash available to pay for that. Especially since we're still in hurricane season. Knock on wood, I'm hoping we have a good season and we finish out well with no significant storms. So again, what we've been talking about today is making sure that you're protected from when life really happens. Again, I see the whole spectrum. Lots of clients come into me and they say, well, here's my auto insurance, here's my homeowner's insurance, here's my investment plan. But they're not coordinated to work together. And that's why it's important that we go through a liability identification checklist that we do at SWAN-Capital. And what we do is we go through every line item of your auto insurance, your homeowner's insurance. And we're not trying to sell you any more insurance because we don't have a dog in the fight. That's what your State Farm or your Allstate or Geico or USA is trying to do for you. But what we can do as a third party at SWAN-Capital is give you a different perspective and say, here's your financial plan, here are your assets, and here's the insurance cover. And what I have found is many families that skip on auto insurance, it's because they're just trying to save money. They're frugal, and a lot of times the people that have accumulated a lot of assets because they're frugal. Again, the problem is there's some things you pay for what you get. And auto insurance and homeowner's insurance is exactly that. So if you skimp there, you can really cost yourself a lot more money down the road. Now, I want to address another thing, self-insuring. There's a lot of families that believe in self-insuring for homeowners insurance. Sometimes it works, sometimes it doesn't. If you have a house that can be easily rebuilt, that might be an option. But for maybe for $2,000 a year, you protect yourself, and you actually have this side pot of money which you are self-insuring with for $100,000. You can have that money go to work and potentially make more money than the insurance premiums are. Just the thought. So again, I don't want anyone listening, yourself included, to be in a ticking time bomb that's rolling on, that has inadequate coverage compared to their financial plan. Again, we talked about the aging demographic in Pensacola. In Pensacola, we have a lot of family members, and this may be your mom or dad I'm talking about, that are in their 70s, their 80s, and their 90s, and they're still driving, and you're concerned about that. But how do you even address that? Mom, dad, it's not, I know you've been driving for the last 50, 60 years, but I think you should hang up your license. I've had to deal with those decisions for clients to help tell their parent, your child is trying to make the best decision for you. But no one wants to do that. And so they let the problem linger. They let their parents still continue to drive. But here's the problem financially. They may have $100,000, $500,000 in CDs, money markets, and checking accounts. What we consider liquid and safe investments. But how safe are they truly are when at any time they could get in a car accident or someone could slip on their property, and then those assets are exposed to lawsuits and creditors. You don't want that to happen to you. And here's some of the ways at SWAN-Capital that we help families get over that hurdle. The first way is going through that liability identification checklist. Every client of ours, when we do a biannual review, it's not how your account's doing. What we do is we say, here's 2 out of about 12 different proactive services we do for our clients. And one of those is a liability identification checklist. Many clients come in and say, hey, Andrew, can you look at my liability protection? And we do that. We go through every line item. And we make sure that their assets are matched with their coverage. And once that's done, well, we look at other ways to add layers of protection. Again, no plan is foolproof, but we have to add every layer that's accessible to us. So we make sure the auto insurance is first and foremost taken care of. The next thing we look at is titling. Again, we work with a lot of attorneys to make sure that the titling of members' assets are done properly. If you're out there and you're still driving, but your mom or dad puts you on put your name on their checking account, do you know the liability that you're opening yourself up to? Many families are very surprised when I share with them that when you stick your name on your parent's checking account, or your parent says, Andrew, I want to put you on my checking account so that if I ever get in a bind, you can make these decisions for me. Well, that sounds great in theory, but if you're driving around and you get in a car accident, they're going to say, what do you own? You're going to say, well, I'm a joint owner on my mom's money market account that has $100,000 in it. Well, 50% of that potentially is exposed to lawsuits and creditors. You don't want that to affect not only your life, but your other family member's life. So we make sure that titling is done correctly. The third way is we look at protected assets. And Janet called in earlier with some really good questions. She said, what are those protected assets? Well, there are annuities. There are life insurance. There's Roth and traditional IRAs are options. And also your homestead. These assets cannot be taken from you because they're ideally for your living and your retirement purposes. So you want to make sure that you are protected and there's no chinks in your armor when it comes to your finances. And that's what we help families do at SWAN-Capital. Now, I encourage you to tune in next week. Because what we're going to talk about is a controversial topic. We're going to talk about the good, the bad, and the ugly of annuities. Some people love them, some people hate them. And what I've shared with you is that there's no bad investment. But we're going to talk about the pros and cons of annuities and to see if they're right for you. So it's been a pleasure helping educate you on your auto insurance and your home insurance, on what your money would say. But I look forward to next week when we talk about annuities. See you then.